Hello, and today we're going to talk about Vanek's document called The Investment Case for Bitcoin. This was published January 2020, so this is basically fresh out of the oven. But first, who is Vanek? Well, Vanek is an investment management firm headquartered in New York, and has satellite offices in Frankfurt, Germany, and Australia. They have $49 billion in assets under management, and these guys basically offer different investment choices in hard assets, emerging markets, precious metals, etc. They are a very future-oriented investment company. They published this document, and I think it's very, very interesting. I'm gonna leave the link so that you can download it and read it yourself, but it's super bullish. So let's take a look. What are they saying? The document is divided into three main sections: Bitcoin as a potential store of value, Bitcoin's role in an investment portfolio, and accelerating Bitcoin adoption. It starts off with something very simple, and it addresses one of the first questions that anyone who's looking into investing in Bitcoin is gonna want answered. They're going to want to understand the differences between monetary and intrinsic value. There's always going to be a huge fight in there, a discussion. Bitcoin's combination of durability, scarcity, privacy, and its nature as a bearer asset, which all contribute towards Bitcoin holding monetary value, which is very important, and it's key towards Bitcoin achieving new and higher prices in the future. How Bitcoin is on the path to becoming digital gold, or is it or isn't it? And the key question, because that's the one that's basically in the end gonna drive the price of Bitcoin up, but not as a bubble that crashes later because retail investors FOMO'd in and then they get scared when others start selling, they sell and it crashes the price. But when institutional investors join, this is gonna go up and it's not gonna come down as hard. So if you're in it in the beginning, you can ride that wave up. But we do need those institutional investors in. And why aren't they in? That's a question that's going to be discussed in this document. So first, we have to understand the two types of value. One is intrinsic value and the other is monetary value. And the guys at Vanek make it very, very easy to understand or set examples of which one is which. So goods with intrinsic value, such as equities, fixed income, real estate, corn, wheat, oil, and copper, are those that exist because an economic good produces cash flow. Goods with monetary value are gold, silver, diamond, other types of jewels, Bitcoin, look, it's Bitcoin, Bitcoin is listed here, artwork, and even US dollars. So US dollars are a type of good with monetary value. And it says that these are ones that value, monetary value is value that exists in spite of an economic good not having intrinsic value, or value that exists in excess of an economic good's intrinsic value. So Bitcoin is here comparable to US dollars. Why? Because the US dollars do not actually generate cash flow. They do not produce anything, and they are not backed up by anything. They have monetary value because you believe that that piece of paper is going to be accepted in the future for the face value that it represents. And that can change. Let's dig a little bit more into monetary value. So it says that nothing ever backs monetary value. It is inherently a bet that an object will retain value or increase in value in the future. Items with monetary value are items that store value and can be seen as claims on the future. This may make people uncomfortable, but it has been true since the dawn of civilization. The Spaniards came to the Americas. The Indians thought that the mirrors that the Spaniards brought had value, and the gold they were sitting in, because the Mayans and all those indigenous races had lots of gold. But since they had lots of it, it wasn't valuable to them. But for the Spaniards, it was very valuable. So, as you can see, monetary value arises because of collective belief. Behavioral economics, herd behavior. Humans have long needed a way to store value outside of intrinsic value. So money is a natural consequence of a productive society. The creation of a new object with monetary value is rare but not unheard of. Artwork is a good example. Artwork as monetary value is a phenomenon of the past centuries. Artwork did not have monetary value in the early societies. So monetary value usually arises from special needs or circumstances. Gold acquired monetary value because it was scarce, durable, and relatively easy to make into coins, bars, etc. Bitcoin has monetary value because it is scarce, just like gold, which is spectacularly unique in a digital world, because in a digital world we're used to being able to easily make copies out of mostly anything. Bitcoin is also durable. It has strong privacy characteristics, unlike gold. It is a bearer asset that can be memorized, making it especially useful in authoritarian regimes. It is easily transferable, not such as gold. You cannot carry gold around easily in your pocket, and you cannot go to a store and trade with gold easily. Bitcoin has the possibility to be accepted more widely in the future. It has a limitation right now. But you can continue reading more regarding the monetary theory in the paper. Why does Bitcoin have the potential to become digital gold? As you can see, Bitcoin is being compared to gold, to government-issued US dollar, and basically Bitcoin qualifies as high in the traits that are desirable to becoming digital gold. And now we have reached a very important section of the document. Why don't institutional investors have exposure to Bitcoin? And it says, none of the traditional capital market infrastructure participants handle Bitcoin. The difficulty largely has to do with Bitcoin's nature as a bearer asset. The plumbing to connect Bitcoin with capital markets has been limited. And here we can see the functions or entities that the capital markets have in order to transact in stocks, bonds, etc. and what is missing in the Bitcoin and digital assets world. So we need custodians, we need prime brokers, we need clearing entities, we need settlement entities, we need transfer agents. And those exist for the stocks, bonds, etc. markets. But Bitcoin and other digital assets do not have all those pathways. Or do they? And that is where I'm super bullish on Bitcoin. And I'm going to tell you why. I'm going to show you how that is changing and how I believe that we currently have all the requirements fulfilled. And we can change this X's into checks, green checks, because I do believe that the plumbing was being built during 2018, 2019, and the institutional investors are willing and they want to invest, and the organizations that are going to provide the pathways, runways into the crypto markets for the institutional investors are here, and they are eager to begin. That is why I believe that in the future months and future years, Bitcoin price is going to skyrocket, and today's current price, we're never going to see it again. So let's go into those details. Who is TD Ameritrade? They are a broker that offers an electronic trading platform for trading financial assets, including common stocks, preferred stocks, futures contracts, exchange traded stocks, funds, options, cryptocurrency, mutual funds, and fixed income investments. Did I say cryptocurrency? TD Ameritrade? And are they a large company? Are they a large financial services company? Look, they are located in the United States. So how large is TD Ameritrade? TD Ameritrade has 1.3 trillion in assets under management. So that is not an insignificant amount of money. They are very, very large. And look, another and even larger whale is about to buy them. Charles Schwab plans to buy its biggest publicly traded rival, TD Ameritrade. How much assets under management do Charles Schwab have? They have $3.25 trillion. So they are huge. But why is TD Ameritrade important? Because as I said, one of the limitations why institutional investors have not massively joined into crypto is because of the lack of platforms. And TD Ameritrade is about to offer that. If we go to the TD America homepage and we hit the investment products button, we see the variety of investment products they have to build and manage your portfolio. So you have access to stocks, to options, ETF, mutual funds, futures, forex, margin trading, and cryptocurrency. What do they have regarding cryptocurrency trading? They just announced an investment in ErisX, a regulated exchange for cryptocurrency. So as we saw in the Vanek document, one of the limitations was access to custody, to platforms, exchange platforms, and TD Ameritrade is about to offer this solution. So if you're interested in cryptocurrency trading at TD Ameritrade, you can contact them and they'll let you know when it's available. But they have announced that it is already available for a specific set of clients. So this is already live. Eyeing the digital future, TD Ameritrade strategic investment in cryptocurrency trading exchange. And they say, as digital assets move from the niche to the mainstream, investors continue to seek ways to access the cryptocurrency market. Why cryptocurrency trading now? The short answer, cryptocurrency trading and more broadly, blockchain aligns with our root leadership in fintech. And this is very interesting what they say. When Bitcoin entered the scene a few years back, it was seen by many as a neat little experiment that may or may not pan out. And while some were arguing the merits of a decentralized currency, others looked at blockchain, the technology underpinning Bitcoin, as the future. So they say that while blockchain and cryptocurrencies live up to the recent hype, no one can see the future, but it is clear that firms have been paying particular interest and often investing heavily in digital assets. It started with the financial sector. So they're saying that banks, exchanges, and other financial participants took the early lead in terms of practical use. And other use cases involve real estate transactions, anything involving contracts, intellectual property protection, data management, regulation, governance, and more. As these technologies develop, new cryptocurrencies have been created to support them. Cryptocurrencies are here to stay. And these guys know it, and they want to be a part of it. They don't want to be left behind. As someone said, Tika Tiwari said, or do not pay attention to what they're saying, but pay attention to what they're doing. And they're building. They're building for the future. TD Ameritrade aims to make digital currency products more accessible to retail clients. And of course, they already have their institutional investors probably on board, because they always get on board first before retail does. So this is Ameritrade, huge company, setting their eyes on the future. Bitcoin is in the center, as well as other cryptocurrencies. We'll talk about another company next. Fidelity Investment offers financial trading planning and advice, retirement plans, wealth management services, trading and brokerage services, and a wide range of other financial services. They have an amount of $2.46 trillion as of 2018 of assets under management. So this number is probably larger now. So Fidelity is not a small company. And they are also joining on the cryptocurrency bandwagon. They're also getting on board. Let's take a look. Fidelity launched Fidelity Digital Assets. What is Fidelity Digital Assets? They provide institutional solutions for a new asset class. What do they offer? They offer custody and execution. Two of the things that we saw in the Vanek PowerPoint that are required for institutional investors to come and join crypto, to come and invest in crypto. So TD Ameritrade is starting to offer that. Fidelity Digital Assets is starting to offer that, custody and execution. The future is coming, and these are very, very large corporations. They are not fly-by-night organizations that will come and go, but these are fully regulated by the United States. What do they have on their website? Digital Asset Basics. Let's see what they have. Bitcoin. They talk about Bitcoin. They explain what Bitcoin is. Block height. They talk about blockchain cold storage. So this is a place where you might come to learn a little bit more about cryptocurrencies, basically. News and perspectives. They're launching Fidelity Digital Assets Limited for access to our services in Europe. So they're launching in Europe. Fidelity's cryptocurrency business hunts European clients. This happened on December 2019. So basically less than 2 months ago. Demystifying digital asset data. A look at Bitcoin transaction value. Digital asset data is complex and should not be taken at face value. So this should be an interesting read. Credibility for cryptocurrency scene is gaining, but issues persist. I'm going to come back and read about this. Enabling institutions to access a new medium for assets. So this is what Fidelity is going to do. Fidelity Digital Assets. We're setting the standard for institutional level services for digital asset investors. They are building, and I'm going to repeat it. Do not focus on what they're saying. Focus on what they are doing. In the future, for investors, institutional investors, is going to include cryptocurrencies and Bitcoin in their platform. You're going to see a huge jump in Bitcoin price in the coming months and years. Bitcoin is going to be huge. Digital assets are going to be huge. Cryptocurrency is going to be huge. So you've probably heard by now about Bakkt and how Bakkt was going to allow institutional investors to buy Bitcoin futures that would be settled as physical Bitcoin. but we're not gonna focus on that. We're gonna focus on who is Bakkt and why this brings credibility to the cryptocurrency scene. So what is Bakkt providing? They're bringing trust and liquidity to digital assets market by providing custody. Again, custody, remember what Vanek said. Payments, compliance, and also markets. We're gonna focus on who's also investing with them. Oh, and something very important. Bakkt Trust Company is licensed by the state of New York to provide custody of Bitcoin and is a qualified custodian under applicable laws. Registered with the Financial Crimes Enforcement Network, FinCEN, Bakkt Trust Company complies with FinCEN's applicable regulations and guidance. And this is very important because New York is one of the states that has the toughest laws regarding cryptocurrency. And a lot of exchanges that are allowed to do business in other states in the United States are not allowed to do business in New York if they do not have this license. And Bakkt does have the license, so they can operate basically in all of the United States. Who are the investors in Bakkt? Boston Consulting Group. I'm going to talk about the large ones that grab my attention and the more known ones. So Boston Consulting Group, Intercontinental Exchange, Pantera Capital, but we're going to focus on Boston Consulting Group. So who is Boston Consulting Group? Are they some small organization? No, they're a huge global management consulting firm. They have a revenue of $7.5 billion and they have offices all over the world. So these guys know what they're doing. Their job is to provide and design strategy for companies to secure their growth in the future. And if they're involved in this, it's because they know that the future is in cryptocurrencies and Bitcoin. Something that's very important to consider is Bitcoin's role in an investment portfolio. Remember, institutional investors do not put their eggs all in one basket. They try to balance their portfolio, trying to reduce risk, and Bitcoin could be an important asset that could form part of that portfolio with a different correlation to the rest of the bag. Just like a crypto investor doesn't put all their investment into what we call secondary coins. They also start with an S. I'm not going to say the word. But you want to balance. With high risk comes high reward, and with low risk comes lower reward. So you want to have something that balances the portfolio. So Bitcoin has an important role within that. And Vanek talks about how stock to flow ratio illustrates how Bitcoin can grow in the future. You can come and see this graph. The source is Modeling Bitcoin's Value with Scarcity. It was published March 22nd, 2019. And you can see the link at the end of this presentation. But what I see here is that by 2020 something, we can expect Bitcoin to have a price between, well, this is definitely higher than $50,000. Bitcoin halving illustrates scarcity-driven historical growth. So after every halving, we can see how the Bitcoin price has risen up. And we have the third Bitcoin halving coming up around May. It doesn't mean that the price is going to go up again, because history doesn't have to repeat itself, but it's happened one time, two times. Basic laws of economics say that if the supply is reduced and demand remains the same, the price of the good is going to go up. If supply reduces and demand increases, the price is going to skyrocket. And that is probably the scenario we're going to be facing in 2020 and 2021. After the halving, the supply is going to be cut in half and demand is probably going to increase. I don't think it's just going to remain the same. It will probably increase as more retail investors become interested in Bitcoin and as more institutional investors come on board. And going back to the portfolio and balancing the portfolio, we have something very interesting. Bitcoin historically outperforms traditional asset classes. So as you can see, Bitcoin has outperformed the S&P 500, USA bonds, gold during the past 1 year, 3 years, 5 years. So maybe just in the short term, 3 months and 1 month, Bitcoin has underperformed. But what we know is that in 1 year, 3 years, and 5 years, Bitcoin definitely outperforms. So what this tells us is that basically this could be a better time to get in because it has been underperforming, and we can expect that in the future, 1, 3, and 5 years, Bitcoin is definitely going to outperform. Bitcoin also has low correlation with traditional asset classes. And what the study says is that Bitcoin increases the diversification of a portfolio if it's included, okay? And there's heavy momentum in crypto developments. Look, state regulation. Some states are already creating laws towards increasing Bitcoin acceptance. So Colorado is exempting crypto from state securities regulation. Wyoming has recognized crypto as property and allows banks to be custodians and enables tokenization. Physically settled Bitcoin futures receive regulatory approval, and we can see that with the CME and Bakkt. Established custodians enter crypto, and that is what I showed you earlier on the video. Established brokerages to offer spot digital asset trading, and that's what we talked about earlier in the video. Pension funds and endowments allocated to digital assets, and we see how pension funds have started investing in crypto, and also endowments from very important universities in the United States are setting a little bit of their portfolio into crypto. Global regulators are starting to crack down on ICOs and unregistered offerings. Bitcoin is different. And this is good because it's, in a way, the crypto space has been called the Wild West. And in order for institutional investors to come in, they need laws, they need clear guidance, they need security into how to operate. Remember, they are responsible for the investments they are managing. Imagine if you gave them your money so that they would manage it, you wouldn't want them investing in some fly-by-night organization. No, you would want them to invest in something that is regulated, and now there's ETFs under consideration. So guys, I think that the most important thing is basically that the plumbing required for institutional investors to come into crypto are already here, and we can check these off. Today, Bitcoin is trading at $9,844. I'm gonna leave this video, I'm gonna upload it to YouTube, and hopefully in a year, 2 years from now, Bitcoin is probably going to be trading above $60,000 and on its way to achieving an all-time high, with probably retail investors FOMOing in and pushing the price up even higher. By that time, or you put money into crypto in 2020, early 2020, you are going to be a very, very happy camper. So guys, I hope you enjoyed the video. If you did, don't forget to hit the like button, subscribe to the channel, and I hope to see you very soon. Everybody, have a good night.